Hello everyone, Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. It's going to be sort of a mini rant video. I talk a lot about for stocks that go vertically up tend to come vertically down. We've seen it in a number of stocks. I'm just going to highlight some recent ones that the average retail person should not be in. This day trading, fine, if you want to take a little risk money that you don't care if you lose. This should not be money you're actually looking to save and grow or properly invest. This is gambling money. This is like going to the casino and playing whatever casino game you like. And if you come out a bit ahead, wonderful. If you lose it, you don't really care. The average person should not be trading this way, should not be investing this way. This reminds me, I've been around since a long time. I started in the market back in the 90s. I've been through the dot-com bubble. I've been through multiple bubbles at this point. I'm even talking housing bubbles. So it's the same thing. When things go vertically up, they tend to come vertically down. And people say, oh, I can time it right, I can time it right. Well, a lot of times they don't even give very good sell signals, and people get greedy, like in this one. Well, I don't even know what some of these are. I'm just highlighting some stuff, and I hope this will point out some things so more people don't get hurt, because a lot of people are getting hurt. I'm not going to go into really what I believe is going on behind the price action and how it's sucking in the retail crowd, and then the people who got in early who might be manipulating the price are already exiting and is running up and sucking everybody else in. And there's a lot of people left holding the bag, and they're not understanding this. They're watching videos, get rich quick on day trading. Well, it's the same thing that happened at the end of the dot-com bubble. Everybody thought they were a brilliant day trader. Trading is hard, okay? Trading takes skill, and you can get away with not having a lot of skill for a long time and catch some quick winners when everything's going up. But when markets return to more sanity, you can get really crushed really quick. I saw a lot of people in multiple different market environments run their accounts up very large and then lose it all and more. So please be careful. That's why I'm doing this video. Vertical up generally leads to vertical down. This is a Chinese stock. This is a daily chart. Vertical up. One of the things that sucks people in, let's say I bought at 10. And I'm just happy to double my money. I get out at 20, and then I watch it go above 130, or I don't even know what the high is here. What's the high? 129, so roughly 130. Oh, but I could have tripled, I could have quadrupled, I could have quintupled my money. So next time you try to hold longer, and then it collapses down. So vertical up, vertical down. You can probably see this one even better on a one hour chart. Look at that. That's insane. And now look where it is. It's back to virtually where it was a couple days ago. Let's check another one out. JFIN. I don't know. I don't even know what these companies do. Let's see. What was this one? Let me get over here. All right. There's your chart. Big gap, vertical up, vertical down. So even if you got up on this day, if you get in this day and didn't get out the same day, and held the next day, you're a loser. You're hoping it rallies back. Well, it's probably not rallying back. This is not a healthy move. Healthy stocks do not trade like this, and we're not over in a healthy market. There's a lot. I'm not even going to get started on that. It's a very speculative market. And some people make some money, they get in early, they get out, and a lot of people get burned. Seen it many times. When you see patterns like this, stock going from, let's just say $3 to $30, then back to $4. There you go. Not healthy. Was not sustainable. Don't even know what these companies do. Here's one that took a little longer. So it was back trading at $1.40 all the way up. What was the high here? 1173. So it took a couple days. People got sucked in. Genius brands, don't even know what they do. But gap up. If you didn't get out, you're back down. If you got in partially way through this day, you now have a losing position. Now you're just hoping it goes back up so you can get out. You never want to be hoping the market's going to do something so you can recover your money. It means you were in a correct position. This is not, I don't even call this day trading. This is just pure and outright gambling. Vertical up, vertical down. Hertz, I know that's been popular. They declared bankruptcy. Stock is, it's unsecured equity. Okay, sometimes some companies emerge from bankruptcy and the stock doesn't get completely wiped out. A lot of them do get wiped out. Look at this. So it was trading down here at 40 cents. Let's go longer term. So even before, back in February, I mean, this was a $20 stock. We had the COVID thing hit, which affected rental car companies. As you know, that's going to be an industry that gets hit. Gets all the way down, you know, to 40 cents on the dollar. It trades that way for a while. You know, people start getting ramped up. Oh, I even saw stuff on TV. You know, this could be worth $8. It's in bankruptcy. It can get wiped out completely. This is not something the average retail person should be in. Runs up, back down. Okay? And this could, if it gets delisted, there's already been filing for delisting, which they're appealing. But if this gets listed, it's on the pink sheets. It's in the OTC market, and we'll see where it trades then. Not a good stock for retail people to get in. You should not be trading things that are bankrupt, close to bankrupt. They're gamble plays, unless you don't care. But there's other ways to play this. You can buy some of their unsecured bonds for pennies. There's other ways to play this that's different than the stock, but most people aren't looking at that. They're just trying to, oh, look, I could get in. I could have got in at $1 and got out at $6. A lot of people didn't. And don't be one of those. Chesapeake Energy. All right, this is a company that could declare bankruptcy. They're trading 13, running up to what above 75. What's the high here? 77.50, and then back down. Right today, closing 1764. So everybody, unless you got in way back here, and there's a reason it was trading here. Look at this chart. It sold off. This is not something you should be gambling with, unless you don't care. Unless you're playing black or red at the casino, I'm going to hit it big, or I don't care. You know, if that's your attitude, well, then you're not really a trader. You're just a gambler. And I'm just going to keep ranting on this because I've seen it too many times. I would rather have people learn how to trade. Okay, I don't care through who. I'm not selling you anything. I'm just trying to help you not get burned. There's too much hype going on now. There's too much things on message boards. People, the manipulative people are getting in early. They're running stuff off, sucking in other people, and then those are the people left holding the bag. Please try to not be that person, okay? Vertical up, vertical down. I'm not saying we've seen stocks that have multiple vertical ups and multiple vertical downs, but unless you can time it perfectly, which I've seen very few people who can in the long term, you can get lucky a few times, but to try to time this perfectly is very, very hard. That's all I'm going to say about this. If you don't like the video, fine. I'm just trying to help people, and we're trying to help people learn how to trade with real price action. That's why we have this channel to begin with. Hope everybody's staying safe. Please learn how to manage your money correctly. Learn how to trade. If you want to set aside a small fraction for some of these moonshot plays, that's fine. But consider that just pure risk money. Don't be upset. It should not be 50% or 75% or some of these people going in it with all their portfolio and trying to turn a $1,000 account into $100,000 with a few big winners by just dumping it all in. Please don't be that person. Too many people get burned, and you never hear from them again. We'll talk to everyone later. Bye for now.